students, welcome to Sunil's tutorial. I'm Sunil Mirwani and today we'll be doing this chapter called as amalgamation. We are going to do question number 28 in the new textbook. We are going to do question number 28 in the new textbook, right? Name of the company, Useless Limited. Illustration 28, right? Now let's see this. They are saying that the balance sheet of Useless Limited on 31st December is as follows. The shareholders of the company resolved to take the company into voluntary liquidation to form Useful Limited. So we are doing useless to useful. Useless getting converted into useful. Right, now let's see this. They have said that the preferential creditors are to be paid 15,000 in full. Unsecured creditors are to receive 50 paisa in a rupee in full settlement of their claim or par value of their claim. 7% debentures in Useful Limited. Now let's see this calculation of PC. Calculation of PC. They are saying 2,500 equity shares of 100 each at 60 rupees paid to be distributed pro rata to the existing shareholders, right? For equity shareholders, 2,500 equity shares of Useful at the rate of 60 per share. Right? 5 shares holder holding 200 shares were dissenting. Dissenting means they did not agree. Okay, they were not happy with the proposal, and their interests were purchased at the rate of 50 per share by assenting shareholder. Who's selling? The dissenting shareholder. Who's buying? The assenting shareholder. Is the company involved in any way? No. The dissenting shareholder is selling his shares, the assenting shareholder is buying the share, the company is not involved in any way. Since the company is not involved in any way, this transaction is not going to be recorded. So whenever you have a dissenting shareholder, that particular transaction is not recorded, right? Because this claim is then purchased by the assenting shareholder. Fine? Okay, let's move on ahead. That's it. Someone please help me calculate this. 2,500 into 60.
1,50,000.
1,50,000. Right? That's my PC. Let's see the other calculation. Payment of liabilities. They're saying that preferential creditors are to be paid 15,000 in full. Preferential creditors are paid 15,000. Right? My total creditors are preferential creditors are 50,000. They'll give you separately only, and they're saying that unsecured creditors are to receive 50 paisa in a rupee in full settlement of their claim or par value of their claim in terms of 7% debentures. So unsecured creditors are to be paid 50 paisa in a rupee, that is, they are to be paid cash or they are to be given 7% debentures. Right? They are saying half the unsecured creditors opted to be paid in cash. Half. Unsecured creditors are 1,10,000, that means 55,000 agreed to be paid in cash. Look at your balance sheet, guys. 1,10,000 is your unsecured creditors. Half of them, that means 55,000. That means the balance half must have taken 7% debentures. So now we know the payment of liabilities also. Okay, let's start. First, let's start in the books of Useless Limited. Right? They said that cost of liquidation amounting to 3,500 paid by Useful as a part of purchase consideration, generalize the following transactions, assuming that plant and machinery, stock and debtors are acquired at book value and land and building is taken over at 68,000. Okay. Let's start. First, let's transfer the assets to realization. So realization account debit to realization account debit to land and building to plant and machinery to stock to debtors to cash. Right? Land and building, from the balance sheet I am taking these values, guys. Land and building is 1,30,000, plant and machinery 75,000, stock 50,000, debtors 57,000, and cash 1,000. Right? Someone get me this total, guys. 3,13,000, right?
Yeah.
3,13,000, meaning assets taken over. Next, take over the liabilities. You have sundry creditor account debit. Preferential creditors account debit. To realization. Right? Sundry creditors is 1,10,000. This is 15,000.
1,25,000.
Right? Being liabilities transfer. Right? Once you've done that, once you transfer the liabilities, the next thing that you need to do is you have to, if there are preference shares, you have to transfer the preference shares. Right? We don't have preference shares. The next thing that you have to do is transfer the equity shares. So this is going to be equity share capital account debit. Equity share capital account debit to equity shareholders to preliminary expenses to profit and loss. Equity share capital is 2,50,000. Preliminary expenses are 5,500 and profit and loss is 56,500. So your equity shareholders will be, someone calculate, people?
63,000.
The equity shares transferred. Next, record the PC. Name of the new company, Useful Limited. To realization. Amount is 1,50,000. Oh, this is 63,000. 2,50,000 minus
1,25,000.
1 lakh. Difference is 1,25,000. 63,000 is just that addition, right? And someone cross check again, guys. 2,50,000 minus 5,500 minus
1,88,000.
1,88,000. being PC recorded. Right? Next, receive the PC. You're going to receive the PC in terms of equity shares. So this is going to be equity shares of useful limited, debit to useful limited. Amount is going to be, you're going to receive the PC, so 1,50,000. Being PC received. Right? Once you have received the PC, the next thing that you need to do is calculate the profit or loss. So you have, someone please do this calculation. 3,13,000 minus 1,25,000 minus 1,50,000. 38,000. Right? So 38,000. You have this as profit or loss? Profit. Okay, you have profit here. That means credit side is smaller. So in that case, you will have realization account debit. Realization account debit to equity share holders. Amount is 38,000. Right? Next, the loss. This is your loss transfer to equity shareholders. Once you have transferred the loss, then pay the equity shareholders. Debit the receiver. Equity shareholder account debit. To equity shares of useful limited. And amount is you're giving them shares of 1,50,000. Being equity shareholders paid. So that finishes your journal entries in the books of useless limited. Now let's do journal entries in the books of useful limited. In the books of useful limited. Right? First, you're going to have business purchase account debit. To liquidators of useless limited. Right? The PC account. 1,50,000. Being business acquired. Right? Now, you have to take over all the assets and liabilities. Now, the last line says that assuming that plant and machinery, stock and debtors were acquired at book value and land and building was taken over at 68,000. So let's see this. Debit what comes in? Land and building account debit. 68,000. Then plant and machinery account debit 75,000. Then you have Besides that, stock account debit 50,000. Stock and debtors at book value. Debtors account debit. Debtors account debit 57,000. Cash account debit 1,000. Leave a line. 2. Sundry creditors. Sundry creditors is 1,10,000. 2. Preferential creditors 15,000. 2. Business purchase. Business purchase is 1,50,000. Right? Someone please check the two sides and tell me where is the difference. The liabilities taken over. The difference is going to be how much?
4,000.
Half the unsecured creditors opted to be paid in cash. Now see, guys, can you just see the payment of liabilities? In payment of liabilities, half the creditors opted for cash and half of them opted for debentures. Now the ones who opted for cash, they are going to be paid 50 paisa in a rupee. So 55,000 have opted for cash and they will be paid 50 paisa in a rupee. That means they will be paid 27,500. Half of 55,000 is 27,500, right? That means my preferential creditors will be paid 55,000. Sorry, unsecured creditors will be paid 55,000 plus 27,500. 75, 82,500. My sundry creditors, that is unsecured creditors, will be 82,500. Guys, everyone's understood from where I got 82,500? Unsecured creditors are 55,000. The sum says that they are going to be paid 50 paisa in a rupee. They won't be paid entire 55,000, they will be only paid 50 paisa in a rupee into 50 divided by 100. They give you 27,500, right? So they are going to be paid at the rate of 50 paisa in a rupee. So that is 27,500 plus that 55,000. Now how much is the difference? 3,500. On the credit side?
Yeah.
Since the difference is on the credit side, you will call this as capital reserve. Right? Once you've done that, pay the PC. Pay, debit the receiver. Liquidators of useless limited, debit to equity share capital. Amount is 1,50,000. Being PC paid. Right? Once you pay the PC, they are saying half the unsecured creditors opted to be paid in cash. The funds for the purpose were procured by calling up the balance 40 per share. Right? I have issued 2,500 shares. I am going to call the balance 40 rupees on those shares. Money is coming in. Bank account debit to equity share capital. Remember, I had issued 2,500 shares as my PC. Right? At 60 rupees, I am calling up 40 rupees on them. Someone please tell 2,500 into 40 is how much? How much is that?
1 lakh.
1 lakh. Being balance money called up. Now pay the creditors. They are saying that preferential creditors are to be paid in full. Right? Debit the receiver. Preferential creditors account debit to bank. They are to be paid in full. So 15,000 is going to be paid to them. Mean creditors paid. Next, unsecured creditors. That is your sundry creditors. Sundry creditors account debit to. Half of them have agreed for 7% debentures. 7% debentures. And the remaining half are going to be paid 50 paisa in a rupee. Cash. Right? 55,000 I'm going to pay in terms of debentures and 27,500, that's my 87,500, meaning creditors paid. Right, once I finish paying the creditors, they are saying that cost of liquidation 3,500 was paid by Useful Limited as a part of PC, paid, money is going out. So this is going to be goodwill account debit to bank or cash. Amount is, cost of liquidation amounted to 3,500. The cost of liquidation paid. Right? Besides that, I'm not paying anything else. Journalize about transactions. That's it. Those are the only things that I'm going to pay. Right? Let's make balance sheet guys.
That will be equal to 500.
Excuse me?
Because say 6 and 80 to 500.
82 fund. Right? Next, let's make balance sheet guys. Balance sheet, liabilities, fees, assets, fees, authorized share capital. Is authorized share capital given to you? No, not given to you. Issued and subscribed capital. Under issued and subscribed capital, you have equity share capital is 2,50,000. Right? How 2,50,000? 1,50,000 I given to the liquidator, and another 1 lakh I called up, right? Then you have reserves and surplus. Under reserves and surplus, you have capital reserve, 3,500. Any other reserve? That's it. Then you have secured loans. Under secured loans, you're going to have 7% debentures. 7% debentures are 55,000. Then you have unsecured loans. There are no unsecured loans. Then you have current liabilities. Under current liabilities, you have sundry creditors and preferential creditors. Creditors and preferential creditors. Both are nil. Both have been paid off. Right? Preferential creditors and sundry creditors both have been paid off. Fixed assets. First of all, you have goodwill. Goodwill is 3,500. Then you have land and building, 68,000. Plant and machinery, 75,000. That's it, right? Then investments, nil. Then you have current assets. Under current assets, you have stock. Stock is 50,000. Then you have debtors. Debtors is 57,000. And then you have cash. Cash, someone will have to calculate. Minus 1,000. Sorry, plus 1,000. 1,000. Plus 1 lakh. Minus 15,000. Minus 27,500. Minus 3,500. Right, someone check the balance sheet please. 250, 3 lakh. 3 lakh, 4,000.
3 lakh 3,500.
3 lakh, 3,500. Right? Right. Done?
3 lakh 8,500.
3 lakh.
8,000.
Just check. I will mistake. 3,500, 16,000, 75,000, 50, 57. Yes. 150. This is 3 lakh 8,500. Both the sides are same. 3 lakh 8,500. This 55 plus 3 is 58. Right?
Yes.
That finishes that sum. We'll stop this here for the day. Thank you very much.